This is Home Buying Basics, where we attempt to simplify the mortgage process of buying a home. I'm Azubuike with Edge Home Finance, and today we're talking about assets, the last major category of our C.I.A. series. And specifically, we're going to talk about what lenders are looking for when they're asking you to verify your assets. So, without further ado, let's get into it. All right, everybody, this is going over assets. We're talking about assets today. So assets has to do with your cash to close. Cash to close is all about funds for your down payment and closing costs. And ultimately, you want to be able to show the lender where that's coming from. And the lender wants to be able to feel confident about your ability to source that and know that it is coming from a legitimate place. So just wanted to go over real quick what all is entailed in eligible assets that lenders feel confident about. And typically, you want to be able to go off of this list here. Anything outside of this could allow for an exception, variable kind of situation, but mostly it's going to be what's on this list here. So let's go over this real quick. Depository assets is basically straightforward: checking, savings, certificate of deposit, some kind of bank account held at an FDIC. Typically, you want to be able to show 2 months of statements for these assets. Okay, so I also have in here parentheses, you must be able to source large deposits. Large deposits is typically any amount over $2,500. In some cases, it might be $1,500, depending on your overall qualification. The lender is going to determine a certain number that anything over that, you're going to have to be able to source. So normally, if it's something like a paycheck, that's very easy to source. You just show a pay stub, right? If you have a piece of real estate that you've sold, you can show them a closing disclosure for that piece of real estate sold. As long as you can trace that large deposit, the lender feels confident to use that. If you can't trace it, if you can't source it, there's potentially a red flag that the lender is going to say, okay, we can't use this account, or we can't use that amount of money in the account for your transaction. So just keep that in mind. The next thing on here is cash deposit on contract. This has to do with earnest money, essentially. So when you first off sign up for a contract and you sign and you've agreed to give a certain amount of money for earnest, this is ultimately what the lender is going to want to see. They're going to want to see you actually verify it from your bank account, show that it came from your bank account. So if you did a cashier's check or a wire, it's really just showing a transaction history document with that amount of money clearing your account, or a bank statement with it clearing your account. So that's really straightforward. That goes towards down payment and or closing costs, depending on how much you put in. The next thing I got on here is gifts. So gifts is something that a lot of people are kind of get hung up on. First off, it can only come from a family relative. Blood family relative is all that lenders will allow for a gift. So typically on conventional, they're just going to require a documented gift lender, a letter showing where it's coming from, who is coming from, and the method in which they're giving the money to you. For government loans, donors will have to show bank account statements. So a lot of people get tripped up on this because, they're like, well, I'm not on the loan. Why are you requiring me to show my money? Where I'm just trying to help my relative get the house. Well, then I can definitely understand that, but understand where this is coming from. A lot of people get defensive because they feel like, hey, I'm not trying to show my private information. But if we're dating back to 2008 and 2009, when the industry took a huge crash, a big part of that was fraudulent activity in these loans. Fraudulent activity, including illegitimate funds. So non-legal funds coming from just, I don't know, whatever, just criminal stuff, right? And so the way that the government has decided to clean this up is to be able to document everything. You got to be able to show where money's coming from. So if someone's not on the loan and their funds are going to be a part of the loan, that's ultimately why they're asking you for statements. They want to see that your money is legitimate as well. Because you got to understand, these lenders, in order for them to stay in business, they have to abide by these guidelines. And these guidelines allow them to sell their loans in the secondary market, get their money replenished so that they can continue to lend to consumers like me and you. So that's ultimately the why behind that. Again, just realize that this is all for our good. When we have a clean, documented industry for mortgage lenders and them having to hold to these requirements, it's better for us as consumers. It's actually ultimately for our protection. So that's just the way you have to look at it. Gifts of equity also has to be from a relative, family relative, but this is representing the portion of seller equity that's coming from the net proceeds that the seller gets. So this is ultimately for a situation where, let's say you're buying your auntie's home and your auntie wants to give you some of her net proceeds. That is what is considered a gift of equity, and that is allowed as long as you're related to the seller. Net proceeds from the real estate sale. That's if you're selling your home, you're buying the next home, you're using the down payment, or I'm sorry, the net proceeds from the sale of your home for down payment. So this is really straightforward. We have a lot of clients that do this simultaneously. You basically sell same day you close on the new home. As long as you can show a closing disclosure that's been executed from the sale of the home. When I say executed, I'm meaning signatures from you, the seller, the purchaser of your home, and then the agents, and you being able to show that document to the title company for the purchase of the home. That's typically a funds for closing, clear to close. What am I trying to think of? Condition. The condition for clear to close is typically for funds to get to the closer. They just want to be able to see a closing disclosure from the sale of your home. So that's pretty straightforward. Moving on here, secured borrowed funds is basically just any asset that you have, whether it's a 401k, mutual fund, you can actually borrow against it as long as you can show documentation for what's required for the repayment of that loan that you're borrowing against your own assets. A lot of times lenders will allow that. More straightforward, I should say, is real estate secured funds. So cash out, home equity lines of credit on properties that you already have, lenders will allow you to use that money for assets, for funds for closing and down payment. And ultimately, grants and down payment assistance loans. The main thing to remember with this is a lot of these loans are set up on the down payment assistance side as a second lien. So when you're getting money from them, just want to make sure you understand the terms, because those second liens will require you to pay them back. So even though you don't have to make payments on them once you have them, you have to pay them back once you sell the home or refinance the home. So just keep that in mind. And then the main thing to remember with these is they're not allowed on second homes or investment properties. All right. And the last thing I got on here is cash on hand. Now, cash on hand is kind of a tricky thing again, because a lot of people feel like, oh yeah, I got my cash, I've been saving it under my mattress for a long time. Well, you can't actually use it until you've been able to show that it's been seasoned. And the whole seasoning requirement goes back to some of those things I was discussing earlier. Some of the things that has been put in place, some of the requirements that's been put in place to make sure funds are legitimate. So there's this idea that if you have the funds sitting in your account for at least 2 months and no one's coming after them, then they're legitimate. So just keep that in mind. If you have a bunch of cash stashed away and you're planning on using that for down payment, you want to actually put it into a depository institution and let it sit for 2 months before the lender will actually allow you to use that as an asset towards down payment or closing costs. So that is pretty much it. Hopefully that all makes sense. If you guys have any questions at all, definitely feel free to reach out anytime. Always happy to help. And thank you for tuning in. Till the next video, you guys take care. God bless.
Thanks for watching. If you found any of the content helpful, please subscribe, hit the notifications icon so that you can be informed of the next video upload. And if you're a borrower looking for a home loan, purchase, or refinance, I'd love the opportunity to work with you. Please give me a call or start the process at applywithzo.com.